Stocks may be rallying on hopes that inflation is declining and the Fed's done, but will investor optimism carry over into 2024? My next guest thinks so, thinks stocks will move higher, but there will be changes in leadership. Joining me now is David Katz, Chief Investment Officer at Matrix Asset Advisors. David, it's good to see you. And remind me, it's hectic around here. How did the second half play out for you? As expected or not as expected?
Pretty much a lot of things that we thought would play out have played out. The market's been very volatile. Oil prices went up, then they came down. Inflation's coming in much lower, and the Fed is likely done, although they're not going to admit they're done for some time.
And if it's played out sort of as expected, what would your analysis or description be of what's happening with the market kind of as we close out the year?
Well, we think the market has done relatively well, although it's been a massive divergence of returns. So if you look at like NASDAQ is up 30, 40, 50%, growth's up 30 to 50%, the S&P is up 20%. However, there are many pockets of the market that are essentially down to flat. The S&P equally weighted is up 4%. Value strategies are up 1 or 2%. Dividend strategies are flat for the year. So there's this huge divergence. We think investors should try to position themselves for next year to take advantage of that. And we're expecting a change in leadership. You had a massive change in leadership this year. The things that did great did horribly in 2022. We're expecting that to happen again with the laggards being the leaders and the leaders slowing down.
And some of these, I don't know if you were talking about places like healthcare in particular. That's been a real disappointment for a lot of people. The Russell 1000 growth, meanwhile, up 36%. I don't know if you'd want to follow that trend or not. So you kind of lay it out. What do you think your boldest calls are for 2024?
So we think the dividend stocks, which have been miserable this year, are going to be a very good place to be. Value strategy is going to be a very good place to be. Growth is going to slow down. We think small and mid-cap stocks, which have done particularly poorly also, on top of doing badly last year, are going to be a much better place to be. We think that mega cap growth can do okay, but we're definitely not expecting a repeat, and now would not be the time to be piling into those companies. We've owned a lot of them. We still own them, but we're just not putting new money in, and we're much less excited about them.
Some of the ones you like, AbbVie, Air Products, American Electric Power, Texas Instruments, so they really kind of run the gamut. What would you say are the names that you're definitely not interested in buying here?
Well, if you're looking at some of these growth stocks that are selling at 50, 60 times earnings, we'd be wary about putting money into them. We just don't think you want to be chasing the hottest stocks this year. A lot of semiconductors did great. Texas Instruments has done particularly poorly. So we think they're going to be the next place that catches up. So within tech, we'd be looking at some of the laggards like the Texas Instruments, like a Cisco, which just had a very disappointing quarter. And beyond that, we just wouldn't chase some of the winners. And we own Apple, we own Meta, we own Google, we own Microsoft. We still like them. We're just a lot less enthusiastic about it.